If the market is breaking higher, it's time to consider undervalued stocks. Market rallies create an opportunity to own undervalued stocks. Extreme Networks. This growing company is getting caught up in the wider tech sell-off. Solo Brands. A market turnaround is likely to reverse the e-commerce retailer's two-year slump. Array Technologies. If the solar sector is ready to heat up, investors will appreciate the value in Array Technologies stock. Let's dive in. Here are the 3 undervalued stocks that could catapult you to riches in 2024. Welcome to Timely Investment Research. After enduring a brutal sell-off in September and October, investors are enjoying a more enjoyable start to November. The S&P 500 closed in the green for 5 consecutive days for the first time in 2 years. This is bringing some money off the sidelines, which means the hunt is on for undervalued stocks. What's changed? For starters, the Federal Reserve is confirming that it is close to ending its campaign of hiking interest rates. That doesn't necessarily mean that interest rates will be going down anytime soon, but it's having an impact on the bond markets, which is making equities more attractive. Does the rally have staying power? Many analysts believe that it does, at least through the end of the year. If that's so, it becomes a stock picker's market. I found these undervalued stocks using a stock screener and looking for growth stocks with a low price-to-earnings ratio. While not a perfect nor standalone metric, the P/E ratio is widely accepted as one way of determining if a stock is properly valued. Number 1. Extreme Networks. Extreme Networks focuses on the design, development, and manufacturing of wired and wireless network infrastructure. In addition, it delivers cloud-based networking solutions that will be critical as companies look to harvest data to leverage artificial intelligence. However, with a market cap of just over $2 billion as of this recording, Extreme Networks stock is flying under the radar of many investors. The stock is down 44% in the last 3 months as tech stocks have fallen out of favor. That's put the stock down near its 52-week low, and it's trading at 24x earnings, which isn't outrageous for a stock in the technology sector. In its most recent earnings report delivered November 1st, Extreme Networks delivered another quarter of revenue and earnings that were higher year over year. And the company continues to win contracts that will make this revenue something investors can count on for years to come. Number 2. Solo Brands. I'll admit to being a little surprised to see Solo Brands on a list of undervalued stocks. The direct-to-consumer company offers an array of products geared toward an outdoor living lifestyle. Solo Brands went public in late 2021. This was after the company's products became enormously popular in 2020 and 2021 as consumers were looking to spend time outdoors. But since going public, Solo Brands stock has been on an almost uninterrupted downward trend. As of this writing, Solo Brands trades as a penny stock. There's some reason for the decline. In the face of tough comparisons, not to mention a stressed consumer, revenue and earnings are lower year over year. However, if the analysts are right, the sell-off looks overdone. Analysts are projecting a 43% increase in earnings in the next 12 months. They're even more optimistic about the Solo Brands stock price, which they project could rise 120% in the next 12 to 18 months. That means it won't be a penny stock for long. Number 3. Array Technologies. The last of the undervalued stocks on this list is Array Technologies. Array specializes in solar tracking solutions that maximize the efficiency and output of solar panels by adjusting their orientation to follow the sun. Inflation and interest rates have made 2023 a brutal year for solar stocks. But the International Energy Agency projects the solar photovoltaic market to account for 22% of global power capacity by 2027. Prior to the recent market correction, Array Technologies stock was down 11% in 2023. And the stock does have a rather unsightly P/E ratio of 35x earnings. Nevertheless, the forward P/E ratio is a much more appealing 19x. The key is the likelihood of Array Technologies delivering on estimates of earnings growing by 40% in the next year. If it does, it's not hard to believe that Array Technologies stock could have the 59% upside that analysts are forecasting. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.